To buy or sell real estate in the East Bay right now, focus squarely on Union City. Headlines about falling home values often suggest a comfortable, slow-paced environment for buyers to negotiate. The macro data supports this, showing a 3.7% annual decline. However, local transactional data presents a conflict. Despite that drop, buyers here are actually paying 103.5% of the asking price to win. Demand is so intensely concentrated right now that buyers are aggressively bottlenecking to squeeze through an incredibly tight housing window. This disconnect leaves buyers feeling misled by the promise of regional discounts, while sellers remain unsure of how much leverage they actually hold. Despite the year-over-year value dip, this remains a fiercely competitive seller's market. The math supporting the seller's advantage comes down to scarcity. We are sitting at an extraordinarily low 2.7 months of inventory. This comparison shows friction between headline and timeline. The downward macro trend is neutralized by the micro reality. Median properties penned in 13 days. This 13-day sprint removes any time to request concessions or negotiate lower prices. A hypothetical regional discount means absolutely nothing if you cannot outbid your competition in a 2-week window. For active buyers, viewing the 3.7% annual drop as a sign of an imminent crash is a strategic mistake. Look closely at immediate market movements. The median sold price actually ticked up 1.23% last month, landing at 1.34 million. That upward movement indicates the market found a new baseline floor, resisting further downward pressure. The current market is undergoing a calculated correction rather than a total collapse. When a falling object meets an unyielding, structurally reinforced base, downward momentum stops instantly. That is our current market. The correction is already baked into the seller's initial asking price. Securing the property requires paying full market value. Sellers face a different dilemma. Does cashing out now offer better returns than holding on for a higher baseline valuation? Then the primary threat to waiting is the recent inventory growth. Month over month, the volume of properties hitting the market has jumped 6.5%. Expanding that view, this bar chart reveals that total active supply is up 14.6% compared to last year. Increased volume puts your listing under immediate pressure. Buyers are now looking at your property alongside the one that just listed 3 doors down. Because buyers have more options, they are becoming increasingly discerning. Commanding a premium over your asking price now requires a completely turnkey home. While sellers still hold the advantage, the margin for error on pricing and property condition is shrinking. How long can this high-speed over-asking paradox realistically hold together? The answer lies in the market absorption rate. This measures the pace at which buyer demand consumes the rising supply of homes. If monthly listing growth consistently outpaces the 13-day consumption rate, the 2.67 months of inventory will eventually cross the 3-month threshold. It eventually overwhelms the vessel, spilling over the edge and completely changing the physical environment. Time is slowly building leverage for buyers while working against sellers. Maximizing your current advantage requires immediate, decisive action. Executing a transaction in Union City right now requires a specific tactical approach. For the seller strategy, intentionally price your home just below that $134 million median. This creates the bidding wars that drive final prices higher. The optimal buyer tactic is to step away from the 13-day rush. Focus your search on active listings that have sat on the market for 20 days or more. Avoiding these bidding premiums means you must be willing to accept cosmetic flaws and manage your own renovations. Maximizing your leverage in Union City depends on aligning your strategy with these current market conditions.